Hey, welcome back, everybody. It's Friday night, so that means it's time for a market conversation. I'm your host, Jerry Hall, broadcasting from beautiful Costa Rica. Tonight, I've got a great show lined up for you. We're going to have Austin from TaxBit live in studio. We're going to discuss his crypto journey, right? What he's doing in cryptocurrencies for himself personally. And then we're going to dive into the important topic of taxes and how TaxBit can actually add value to every one of us as crypto investors, regardless if your favorite coin is XRP or Bitcoin or whatever it is. Understanding these principles and really being able to understand how inflation, and whether it's coming from a place of the purchasing power of your dollar when you want to buy gasoline or milk, or how it affects your investment decisions and forward-looking expected returns from your investments. Inflation is it's not something people talk about a lot when they're talking about assets and purchasing assets and looking at future returns. Most of the time when we're talking about inflation, we're discussing how it's going to affect us at the pump or how it's going to affect a home purchase. But equities and bonds and crypto and gold need to be or should be considered in that discussion. Reason being, if the assets that you're investing in have a positive appreciation element as it pertains to inflation, then you can expect a much higher rate of return than if you are purchasing an already inflated asset, Apple, Netflix, Google, etc. Also understanding how the back end of that, which is your tax liability on things, understanding these things ahead of time so that you can make decisions that maximize, or I'll use a word from Austin, optimize your tax liability, puts you in a position to keep more. Remember, at the end of the day, it's not always how much you make. It's how much of what you make do you actually keep. So with that being said, let me bring live into studio Austin from TaxBit.
Hey, Jerry.
Austin, so great for you to join the show.
Great to be here. How's it going in Costa Rica?
Oh, man, it's paradise. I'm living the dream. You know, here's the thing. Most people don't know this because when they see me on camera, I'm wearing a shirt. But in day-to-day life down here in Costa Rica, it's shorts and flip-flops, and that's it.
That's amazing. Yeah, that sounds like quite the lifestyle. I like that. Are you in the water much?
You know, here's the thing. I live approximately 1,000 feet above sea level, and I chose this because the weather is it's like spring all the time.
Yep.
Right?
Yeah.
You get down to sea level, man, and it's warm. Not only is it warm, it's a little humid.
Oh, that sounds lovely. Congrats.
All right, thank you.
That's all that's needed.
So, folks, a lot of folks that'll be tuning into this are they're well adjusted to the content on my channel. We did get some great engagement from the interview that you and I did that I was able to post on the channel. A lot of engagement in the comments. I got a lot of engagement on Twitter as a direct result of that interview. And I think it's because most of the time, most of us as investors, we're focused on forward profitability, the soundness of our investment, and looking into new investments. Very few of us put any time thinking about the liabilities of the capital that we're allocating to these investments when it comes time to settle up with the tax man. So before we begin our TaxBit extravaganza, why don't we share with the audience a little bit, because we didn't in the interview, your personal journey into digital assets and how you've constructed your personal portfolio.
Yeah, that's a great question. So I was introduced to cryptocurrency early 2017, and I'm a CPA, so I'm a finance nerd. So for me, it wasn't that Bitcoin or Ethereum that turned me on. It was actually the underlying technology and infrastructure. There were three primary things that I saw that were completely disruptive to traditional finance. The first was eliminating the middleman on transaction fees. That's such a big problem in corporate America today. We're paying credit card processors off the top. We're paying banks. We're paying all these intermediaries who don't do much, but yet they take their cut. And so I'm like, well, virtual currency solves that. The second thing was, Jerry, can you hear me?
Now I can. The second thing was,
hey, sorry, Jerry, can you hear me?
yeah. The second thing was,
yeah. So the second thing was instantaneous cross-border payments. So it takes so long. We're in the 21st century, and I was, a controller at a large corporate company, and I missed payroll in our Australian subsidiary because the wire went out the door 30 minutes too late, and it took 3 days to clear. And it's like, we can't transfer funds instantaneously in the 21st century. I'm like, well, virtual currency solves that. And then the third thing, which in 2017 didn't exist much, but fast forward to today, and you're starting to see these projects, is actually being able to tokenize real assets, mainly real estate, and make those liquid and accessible to everyday investors. You no longer have to be a millionaire and purchase an entire real estate complex as passive income. You can now go purchase fractional pieces of equity. And so there's a lot of use cases coming in the future, but that's what initially turned me on to cryptocurrency. And so from there, I started dabbling in it, purchasing your main coins. And then the bull market happened, end of 2017 comes. And from there, it was just like, oh, wow, this is incredible. I'm going to go trade into every altcoin there is. I'm making 200% in a day. This is too good to be true. And then you know what happened. Early 2018, and it was like, boom, tanked. So from there, it's been a good ride, and you're starting to see, I think, more long-term stability over the last 2 years. A lot of these scam projects are going away. There's a lot more certainty, credibility behind the asset classes and the projects that are coming to market. Right now, to be honest, I've done less of the altcoin stuff. I've learned my lesson from that, and I'm more long and not trading every day as frequently, more buying and holding, and just kind of doing that dollar cost averaging method of making sure you're buying in over time, and that way holding on for your long-term appreciation. And then obviously incorporating tax loss harvesting and optimization, which we'll talk about in this show, all along the way. That way you can take advantage of those dips and report your tax losses on that. And so my theory is that most cryptocurrency people or holders should be accumulating wealth in the long run while recognizing tax losses over time. And so that's exactly kind of my strategy, and happy to share more about that as we progress.
And we will. But however, before we depart from Austin, the individual, are you at liberty to discuss? I don't need to know amounts, but the kind of the construction of your portfolio. Give me an idea of some of the assets that you see in this long play that you've made.
Yeah, I'm pretty basic. I'm, a Bitcoin, Ethereum. Ethereum is the ERC20 protocol for so many of these projects. Even almost all of DeFi, Uniswap is all built on top of Ethereum, and so that I'm definitely bullish there. And then Bitcoin. So that's most of my portfolio, along with a few alts, but very small portion of my overall wealth in cryptocurrency.
Sure. Well, let me ask you this, because right now, specifically pertaining to those two assets, Bitcoin and Ethereum, neither one of them produces a yield. So currently, all they really are is a capital appreciation play. And there's nothing wrong with that. I mean, they've got a huge upside on the capital appreciation side. I'm curious, knowing what you know, are you leveraging those assets on a different platform or any other way to produce more yield than just holding it in a Ledger Nano?
Yeah, I personally am not. Like I said, our company works with just many thousands of cryptocurrency folks, such as everyone in the audience. And so I have seen every strategy out there imaginable, work with thousands of people that take the margin leverage approach, thousands of people that take the hodl approach, thousands of people that use bots and are making constant trades all the time based on market optimization. So yeah, I'm familiar with everything. For me, most of it is, a time thing, and I'm heavily work all the time on TaxBit and stuff, and so I don't have as much time to do the research and to leverage up and to be a more active trader.
Okay, well, I want to get into TaxBit here in just a minute, but we got a question here from Bill Gould. Bill Gould's a regular on the show and actually has supported my channel from literally day one. Question: does Austin use Bitrue, Power Piggy, or Celsius to grow his portfolio through compounding interest? I think you answered that.
I use BlockFi actually for the interest accounts. I'm a huge BlockFi fan. They're a partner of ours, and so that's who I use. They're super credible and pay amazing interest. So absolutely, as far as actually being able to give your crypto over to a custodian that's going to take good care of it and then receive interest payouts every month, I'm a huge believer in that. And there's some really
okay. Well, that was the question I asked you.
Oh, okay. Yeah, I thought you were referring to more margin trading, leveraging, and
No. Well, I mean, it's all in there. It's all encompassed. Anytime you take your asset out of a ledger and put it somewhere, it's usually for a purpose, right? Traders put it somewhere else for the ease of access, so they can move it around. Investors will put it there to receive a yield, whether it be in the form of a dividend that's in the US dollar denomination, or a dividend in the form of the actual underlying asset, some fraction of that, or what have you. I will tell you, it is almost irresponsible to own Bitcoin and Ethereum and not be earning more of the underlying asset through one of these third parties, whether
I agree with that. There are credible platforms out there. Celsius, BlockFi. There's Salt. There's
Cred Earn. Let's not forget Cred Earn, one of the partners of one of your partners.
Yep, Cred. Yep, exactly. They're affiliated with Uphold, who's a big partner of ours, and so absolutely.
Right. So I do that. I'm doing that with my capital appreciation only digital assets, and then I have VeChain and Cardano, which I believe strongly in the product itself, right? So it made sense for me to download a Daedalus wallet on my computer, move my assets into my Daedalus wallet, and then stake my actual asset to a validation pool to receive more of the underlying asset and be part of the community and system and network for diversification. I mean, not diversification purposes, for decentralization purposes, but also the yield. To get 4% on something that I believe in anyway.
Yep. You can't do that in traditional finance. Yeah.
Name me a bank account that's going to give me 4% of my money. I mean, literally, here's the ugly truth. In traditional finance right now, there are triple B, damn near junk bonds barely paying 4%.
Yeah.
That's scary. So anyway, let's do this. I'm going to look through the thing. Let me shout out a few people. Crypto Ice, incredible. Hey, Wade, nice to see you. Bill, I mentioned. Steven, good to have you here, man. We've got, look at this. Lori, P. Kelly's in the house. Hey, guys, thank you so much for coming in. Bill Gould, of course. Bit Av is in the house. There's a lot more people in the stream that's in the than there are in the chat, and that's okay for those of you that just want to listen and consume and take this in. That's great. But if you want to participate, we are probably one of the premier live streams. It's about engagement and interaction. So, Austin, let's switch hats, man. Let's flip the cap and come from a position of one of the founders of TaxBit, what your vision was, what you're doing, and then we'll get some questions from the audience for you, because I am sure this is a topic a lot of people don't have down flat. We're going to need to learn to get up to speed on it.
Taxes aren't everyone's favorite topic, and we're not all experts. Yeah.
No, we're not.
Exactly. That was actually a big thesis and part of when you asked about our vision and why we started. It was just that. At the beginning of the show, I named kind of the 3 use cases of the underlying technology of crypto and blockchain that got me into the market. Well, as I dove into each of these use cases more, it became apparent to me that none of that could be possible without tax compliance at scale. And so just being a CPA, having worked in the tech space and fintech space for a decade now, it was, oh, wow, like there needs to be software that can solve tax compliance on virtual currency at scale. And so that's exactly the vision of TaxBit is, hey, there is so many cool, innovative projects, but we need to take off the burden of tax reporting and all the back-end regulatory compliance necessities that absolutely have to exist in order for cryptocurrency to become mainstream. And so you started to see in the early 2017 days, it was a little bit more wild, wild west, and there wasn't much enforcement. Well, what people don't understand is that the IRS audits on a 2-year lag. And so prior to 2017, cryptocurrency wasn't material is the word. It wasn't impactful to really the IRS because, Bitcoin prices were stagnant and they were low. Well, 2017 changed everything. Major adoption occurred and prices just went through the roof. People were actually making, material wealth. And so unfortunately, it was a good thing, but the IRS didn't audit the 2017 year until 2019. So we're talking last year. And so at that point, it became material to them and a focal point. Oh, wow, this asset class does have a powerful community behind it. It has a lot of potential and movement. And so we are going to start devoting significant resources to the regulatory compliance behind it, mainly taxes. That way, we can get our money as a government. I'm speaking for them right now. And we can allow this asset class to continue because that is the only way, in my opinion, virtual currency is going to continue to exist and progress is if regulators get behind it and people are compliant around kind of your corporate and regulatory obligations that every other asset class adheres to.
Very well said. We got a question already, and I think it plays exactly to what you were just talking about. Bill Gould, again, question. What about those who haven't paid taxes in many years? Will your project help? Asking for a friend.
Hey, there's no judgment here. Actually, you're in the same camp as a lot of people. So, or if your friend is in the same camp as a lot of people, that is exactly, we're the only software out there that we actually are upper 2 plans. We have 3 plans to talk about. They include all prior tax years. And so we want to get you caught up. It is very easy to go and report, backfile your taxes, amend your prior period returns, and get, in good graces with the IRS and get it right going forward. Ironically, a lot of people that we've helped go and amend their returns and include their cryptocurrency, they're actually getting a check back from the IRS because 2018 was a bear market. There's very likely that you had losses in that year. And so you can actually amend and then get a check back in the mail and then you're in good graces going forward. And so it's actually a wealth creating strategy as well. If you started crypto, in early 2016, you're likely to have made some money and you might have a bill to pay, but it all just depends on your circumstance and situation.
Right on. Here, this is an excellent statement by Ray. Ray's another incredible continuous contributor to the channel. He says, it's funny, we have to worry about crypto taxes, yet there are no clear tax regulations established. We really need clear regulations and a modified tax law in the near future. You know what I find interesting is that now this is just a layman, outside guy, and you're going to correct me. If they are going to tax you, then they have the clarity they need to tax you. So there is very clear taxation because they couldn't tax you if it wasn't clear. It's clear enough to tax you. Go ahead and expand upon that, please.
Yeah, Ray's brought up a good point here, and actually I believe that's one of the biggest, and what you said it pretty accurately, Jerry. I believe that's a very common misconception, at least from the eyes of the IRS. I'm going to kind of speak from their perspective here. From their perspective, in 2014, they came out and said virtual currency is property. Stop. Well, that was it. That's all the guidance they gave us. But from their perspective, property guidance has a huge tax code that equities fall under that, commodities, your precious metals all fall under that. And so it's clear to them. You follow the same rules of other property assets. Well, understandably, you fast forward to all the use cases that are specific to crypto today, it doesn't fall perfectly under the analogies to equities. Like there's no staking equities. There's no hard forks and airdrops. So there are some nuances that you have to analogize to other pieces. But as far as buying, selling, and trading cryptocurrency, it is very clear as far as the rules that need to be done on that stuff. And some of the more nuanced items, such as forks and airdrops, they just released clarifying guidance in October of last year. And so there actually is guidance now specific to those items. And there are, in my opinion, very few items now that we're missing guidance on as far as how virtual currency is taxed.
Well, thank you. And that was very well said. Bill's going to help me usher in something here that I was going to address at some point. So I'll just do it right now. Question: what file format does my friend need to have to work with your software? I will tell you, Bill, that it's really this simple, and this is for everybody. Since my interview with Austin, we spent time off camera at the end of the interview because I was so impressed with TaxBit. I said, I want to champion you in some way, shape, or form. I want to champion TaxBit for two parts. Number one, what you're doing is incredible. And number three, I believe you and your team have built something that's going to be here. They're not fly-by-night knuckleheads, keyboard warriors. Dudes have been in the business. They're coming from law. They're not crypto nerds. These aren't guys that, not that crypto nerds are bad. Please don't take this wrong. These are guys that are professionals in one industry and are applying that to this new market. Now, with that being said, in the description of every one of my videos now is the link for a free 14-day trial to TaxBit. Go check them out. Now, he'll explain the dynamics in here in a minute, how they work with these crypto exchanges to populate and do something incredible with your 1099s that you're going to be receiving from these exchanges. And he's going to be able to say it a lot better than me, but it truly is remarkable. Go down, hit the link, get the 14-day free trial, check out their platform. Excellent customer service. Matter of fact, they put their customers first. That's why I'm standing behind them. And I hope that you will give them an opportunity to address your needs in the future going forward. Austin, why don't we address that? Walk us through what somebody can expect if they hit that link for a 14-day trial. What are they going to find on your platform?
Hey, Jerry, I can do one better. You mind if I share my screen here and we'll just go see it?
No. Can you, or do I need to give you? You know what?
Let me
share your screen, baby.
I see a share screen button. Let me click it and see what happens.
A picture's worth 1,000 words. Please, you are now in control. You have the helm.
Can you see that?
No, they can't see it, but watch. Now they can.
They can see this interface moving.
Oh, sure.
Beautiful.
Now, awesome. Is that how much money you have in your personal wallet?
This is a dummy account, so it is no one's personal data or information. So, yep. So that was a good question. So the first thing that is necessary is we connect to any wallet, exchange, all of your data sources. You click the little add transactions button. I kind of skipped ahead. There's a whole onboarding flow, but that will kind of walk you through this. But you can click add exchange and see a list of tons of exchanges that we all integrate with, and it's as simple as clicking on one of them. We have a video tutorial on how to enter these API keys, which then allow us to pull your transactions in. One thing I want to point out that the crypto community absolutely should ask, well, if I'm giving them these API keys and secrets, are they going to have custody of my assets? Are they going to have my information? No, these keys and secrets, and you'll see in the tutorials, are view-only transaction permissions. We have no custody to your assets whatsoever. We only are asking for the ability to pull them in and be able to view them. So we take privacy and security very seriously. We have a whole team, and we have an independent SOC 2 report is what it's called, from a leading cryptocurrency audit provider. It's a security audit. So as soon as you connect your exchanges and sources, you go through the process. We also support CSV imports, manual transaction adds, very easy to get your data in. All of it will come on into this My Transactions page. And this is now a normalized transaction format. You can filter by the source and see all of your transaction counts across every platform that you use. You can filter by any of your currencies. You can filter by date range, tax years. And then this is where the tax stuff comes in, all of the transaction types. So we will go through and show you, okay, August 4th, this user bought Bitcoin on Gemini. Here was the cost of that. Here was the fee, and that becomes your total price. If I go to a sell transaction, this is what is really powerful, is you can say, okay, I sold ETH on Coinbase Pro on this date. Here was the proceeds I received, less the fee. And here was my cost basis. Cost basis is another word for asset value when you obtained it, asset obtainment amount. You can expand that out and see, okay, I obtained this Ethereum that I sold on January 7th. So the math is very simple. Your cost basis less your proceeds, in this instance, was a taxable loss. And so every transaction has this audit trail, this granular level cost basis breakdown. All of this is exportable into Excel with a click of a button. You can hand this over to your CPA, to your accountant, to the IRS if they ever were to audit you. And all of it's right here, immutable audit trail that supports every calculation. Well, at the end of the year, and actually as you go throughout the year, you can then click on the tax year that you're looking at, and it will roll up all of the totals. So this user had $14,000 in losses in 2018. And so they can then go and click download IRS 8949. We've got a variety of formats. You can see here, we have TurboTax formats that go straight into TurboTax. This PDF format is the actual official IRS tax form. And as it's processing here and running the final resync, it's generating the forms. This form is what the IRS expects you to file and incorporate with your full tax return. I'll show you what that looks like as soon as it's done generating. Cool. Can you see that all right?
Unfortunately, I can, and I know what it means, and I don't like it.
You can see it. Okay.
Oh, yeah.
Okay, yeah. So this is all of your taxable transactions for the whole year, and then it will sum out to that number that's in this box right here, and it's ready to be reported. So another thing, if you're in a gain position, let's say I'm in a gain position. I'll go to a year that has some gains in it. You're going to see this estimated liability box. Well, you can see here some tax rates that are coming in. And these tax rates are specific to you. And this is optional. You don't have to provide this information. But if you want to see, okay, what's my state tax rate? What's my short-term rate? What's my long-term rate? Short-term means I held the asset for less than a year. Long-term is I held it over a year. This number is incorporating, running all the math on this total liability number to see what you actually might have to pay at the end of the year to the IRS. And so you can monitor. What's really powerful about this is you don't have to wait until year end to run these numbers. Let's go into 2020 here. This user doesn't have any data that hasn't made any taxable trades in 2020. But if you were, you would see this number populate real time. And so you can log into your account after trades are made, and those trades will automatically come into our system, and you can monitor your tax position as you go throughout the year. Super, super powerful. Well, then it gets even better. The My Coins page shows you where all of your assets are stored across source. So you can see here across all my sources, this is how much Bitcoin I have, Ethereum, all the coins. Here's the USD equivalent value. You can click on this source tab. Okay, this is how much is stored on Coinbase Pro, hardware wallets, wherever it's being stored. But the tax optimizer is really, really neat. So the tax optimizer, it's not enough just to be able to view and monitor your real-time tax position. It's better to be able to reduce that. Let's drive that to zero. What are some optimized trades that I can make? And so you can go and select any asset that you currently own. You can click optimize, and we're going to run some math for you and show you all of your outstanding. And outstanding means current or unused cost basis pools. So in this case, you've got 32 or almost 33 Ethereum that you own. Here's the current market price of that Ethereum. Here's your cost basis. And then here's your resulting gain or loss. In this user's instance, they're in a gain position. The market price less your obtainment value, your cost basis, is your gain or loss. Well, we're then going to show you, we're going to break out this 32 Bitcoin by line that sums back up to this as you go through all the lines and show you, okay, if you were to trade any one of these lots, here's what your gain or loss would be. In this example, you'll see every one of their lots is in a gain position. And so this user knows if I were to go trade Ethereum right now, it's going to increase my taxable gain position by whatever, lot I sell. If you're using specific ID, if you're using first in, first out, it's going to take this earliest date. It will increase. If I go sell 7.9 Ethereum right now, I'm going to have a almost $2,000 gain. Well, what's neat is you can then go and let's go select an asset. Let's just go to like Dash. I don't know if this is a good example or not. We'll see. Yeah, I'm in a loss position on this asset, albeit small. But hey, if I go sell my 0.008 Dash, I just saved $7 on my taxable gains number. I just
Well, hang on 1 second, Austin. Hang on one second. So, does the same logic or same math or laws in taxation work? So let's say I have a desire to acquire some more Dash. Right? Yep. Maybe that's something I want to acquire.
Yep.
As being negative in it already and being positive in my ETH, if I take my positive in ETH and I go buy, am I?
Yeah.
I'm thinking correctly, right?
Yeah. Coin for coin trades are taxable. So if you go and take that ETH and buy Dash, you would realize those gains that I was just showing you on the Ethereum screen. And so, yeah, that is a huge trick that people need to be aware of is, hey, if I want to go buy Dash right now, I should go and look at my assets and find the asset that I have a tax loss in and use that asset to go acquire that Dodge or that Dash. Sorry, I'm thinking Dogecoin here. So yeah, that's a huge trick. And where we're going with this, Jerry, we are a growing company. We're, been around almost 3 years now, but we release constant feature improvements all the time. You'll see right now, as I go back into one of these things, there's this optimize now button. Well, our team is in testing right now where we pretty soon, and honestly, probably by the end of next week, you're going to be able to click this button and you don't need to decipher what to do. We're going to tell you what to do. And so we're going to highlight all of the cost basis lots that give you the most tax beneficial answer and display to you that exact quantity. Well, then after, by the end of the year, you can also opt into SMS or push notifications to your phone where you don't need to go and open this every hour of the day because prices fluctuate so much. You can set preferences. Hey, TaxBit, send me a push notification if I have an Ethereum loss of $500. I want to know about it real time. And so that will come directly to your phone. And then even further than that, we have partners, as we'll get into, with the largest exchanges, which then we can go and take that integration one step farther where you can enter a transaction straight from your mobile device with those partners, which then immediately reduces your tax liability. So there's a lot more automation coming, and it's really just the beginning of how we are going to add more value onto, this already super valuable platform that we have.
I am absolutely impressed. Now, there have been that was an incredible representation. Hang on here, Austin. Okay, I'm going to start with Charlie. Austin, is your tax service limited to current year, current transaction, and forward, or do you handle 2017 and up? I saw 2014 on your screen, so can I come to you and say, hey, Austin, I haven't done anything since 2014. Can your system still get all that data and populate these forms that are necessary?
Absolutely. Yeah, we go back to 2014 right now.
And then you heard it here.
Like I said, Plus and Pro plans. We have 3 plans, Basic, Plus, and Pro. Plus and Pro plans include all prior years. And so we're not charging you per tax year. We're going to give you everything in one of those, Plus or Pro plans, which start at $175. And so it's really, really valuable. As you can see, our goal is through the tax optimizer, we are saving people way more money than the fee that we charge, each year. And so that is a huge thing to us, is we want to make sure that we're not just giving you the value in the form of your tax forms, but we want to give you the value in the form of real hard money savings and a refund check back from the IRS.
No, I like it. So if folks are using my link now, I've put out that they get a 14-day free trial and 10%
discount. Yep.
Is that 10% going forward, or is that 10% for the first time for the first interaction?
Yeah, that's the first year, Jerry. Yep.
All right, cool. And perhaps there'll be something where if they have Jerry coin in their portfolio, that they can get another 10% in perpetuity.
We run promos and we have referral links. So yeah, if you can refer friends and get stuff off. We run competitions and we do all sorts of fun things throughout the year. So yeah.
I think that's great. Here we go from Steven Austin. I have crypto on Uphold and I also have some on Coinbase and Binance US. Would you be able to help me with my 2020 taxes on all my exchanges?
Absolutely. Yeah. As you might have saw, maybe you joined a little late, Stephen, we integrate with every exchange. So we'll pull it in from all of your exchanges and give you one centralized dashboard where you can monitor all of your taxes across everywhere. Not only taxes, but where your coins are, the value of them, and then tax optimization. So
now what about those of us that don't use, wait a second, I guess everything is exchange. I was going to say, what are those that use ledgers and things of that nature, but you had to acquire the assets somewhere. So
yeah, and we are integrating with ledgers right now. And so yeah, before year end, you're going to be able to connect your ledger and be able to see all your coins that they're stored in there. But you made a good point, Jerry. There's no taxable events in that ledger. It's more just for storage purposes and to know where your assets are.
Now, Ray brings up a great question. This is not the first time. Matter of fact, I believe it might have even been Ray, a question in the comment section of the video you and I put out. Hey, I was just thinking about the people that were scammed out of crypto. Can you take a loss on your taxes if you've been scammed?
So yeah, great question, Ray. And you're the same person that asked about the guidance question. So this is one area that is a little big here. And so theft losses, casualty losses in the IRS tax code there's some harsh rules, and you don't really get much relief around those. With that said, this is more of a personal decision and it depends on your facts and circumstances. So we recommend reaching out to our support team, which you'll be able to talk to actual tech support specialists, tax attorneys, CPAs, and we're going to kind of evaluate you through given your particular facts and circumstances to guide you in the best direction. So we have had users take that kind of aggressive position of, hey, this is a proven scam. I lost this. I can show it. I can verify it through the blockchain, and I'm going to be okay with this aggressive approach, knowing it's not as black and white. I might be walking a little gray area here. So we can help you through that, but it's hard to give a universal answer here because it depends on your situation. And I will say, if you do, it is a little bit more in the gray, aggressive nature area.
All right, so we'll take that scam stuff on a case by case. Get a hold of TaxBit, walk through the process. Here's a great question, and so because I know this has happened. What about an exchange that is no longer in business or got banned from operating in your country? Can you retrieve that info?
Oh yeah, we get this question almost daily. Everyone who hasn't used an exchange that was a fraud. So some exchanges, those API keys still work. Some exchanges you can you might have a CSV file. Maybe others your data just might be lost. Let's be honest. And so hopefully you were able to get your assets off of the platform before it went out of business. If not, it falls into exactly Ray's question. You lost your assets. We'll work with you on how to get the most relief possible. If you were able to transfer your assets off and you have no visibility into the data, once again, you should reach out to our support team because we're going to try and help you reconstruct it the best you can. And how we reconstruct it is we look at these transfers coming into, say, you got it off and moved it into Coinbase or into your ledger. And so we're going to at least be able to see what, originally originated on that platform, looking at blockchain records and transfers. And then we're going to do our best at putting a cost basis or kind of an estimate of what you acquired that for at that time. But really good question. And it's best to just, it might not be 100% science, right? It might be a little bit of an art, but doing something and giving it our best attempt is better than doing nothing. So yeah, we can work with people through that.
Right. Well, here's a great one from Steven. He's asking it to you. I know the answer. Austin, if I have my crypto assets in a crypto Roth IRA, do I really keep 100% of my profits in capital gains tax-free?
Jerry, you can answer that. You're so enthused about it.
The answer, my friend, is absolutely. That is the whole purpose of the Roth IRA. So
That's
yes.
Right.
Now this is
Roth IRAs. Roth IRAs are incredible, not just for crypto, for anything. It is, tax-free appreciation. And so I highly recommend, even outside of crypto, everyone should be, if you're eligible, maxing out your Roth IRA if you can, if you have that extra income, because it is an incredible investment vehicle. Along with HSA, health savings account, everyone should look into that as well. I think that actually is the best tax savings vehicle in existence, is that it's tax-free going in and tax-free going out 100%. You have to use it on healthcare, but every single one of us is going to have healthcare expenses sometime in life. And so a Roth IRA, it's taxed going in. Appreciation is tax-free, no tax going out. HSA, tax-free going in, tax-free appreciation, tax-free going out. So anyways, topic for another show, but look up that.
No, it's a great topic. This question from Simu, why wouldn't there be a taxable event on the ledger when you can buy and sell on your ledger? So here's the thing that comes to mind for me. How much are you and the IRS dealing with specifically on-chain tracking versus API data gathering from registered or unregistered exchanges?
Yeah, Samu, that's a good point. Ledger is adding buy and sell functionality. It might have just released it. Yeah, those are taxable events. So yeah, absolutely. Jerry and I are, more referring to people primarily in the past have used ledgers for storage, so transfers in and out, and then getting it back onto a liquidity provider. If you're selling it through the ledger, it's a taxable event. Ledger is quickly becoming, in the IRS's eyes, that they're an exchange. As soon as you add buy and sell functionality, they're now viewed as an exchange. And so yeah, that's a really good point.
Right on. Wade chimes in. I might be wrong because I've had a couple of vodkas tonight, but I believe many tax software does all this for free. And he's referring to a TurboTax. So you're in the business, your competitors. Does TurboTax actually do everything that you do as far as populate data from the exchanges?
Yeah, Wade, I haven't met anyone that does this for free. TurboTax doesn't do cryptocurrency taxes, to Jerry's point. They ingest the final forms that we produce. They do not run your calculations. And so I haven't.
Can I get that one more time in slow motion?
I mean, sure, Jerry.
Wade, you're wrong. You're wrong, Wade. TurboTax does not do your crypto taxes. You have to populate the fields in TurboTax with something like from TaxBit or one of these other crypto quote unquote competitors, because TurboTax does not have that functionality.
Yeah, they don't track cost basis. They don't connect with your exchanges. They can't pull in the data and run those calcs. They've done some. You can get your forms in there. And once again, and TurboTax isn't free either. So, but that's fine.
All right, we got time for at least one more question. We'll see how long it goes. Does your software work in conjunction with TurboTax, or would I have to have TaxBit do just my crypto and TurboTax do everything else?
That's a really good question, Bill. Yeah, we work in conjunction with. We do not do your W-2 income, your 1099 miscellaneous if you're a contractor. We don't do your social security number, your child dependents, all your deductions. TurboTax, we're not trying to compete with them, right? They are a multi-billion-dollar company for a reason. They're massive and they have great software, but they do not track cost basis on your cryptocurrency assets. You have to get our forms and push them into TurboTax and then file it with your full return. So yeah, good question, Bill.
It's a great question. And I think it's important that everybody understand that TaxBit isn't trying to be a full service tax preparer. What they're trying to do is bring a unique specialty from years of experience as CPAs and tax preparers and et cetera, bring it to this new market and provide you a platform so that it's easy for you, the trader, investor, crypto enthusiast, to produce the correct kind of 1099 forms that are going to be necessary for you to handle whether you do your own stuff on TurboTax, whether you go to H&R Block, or you go to your licensed tax attorney or CPA, that your crypto stuff is nailed down. And the reason I'm putting such an emphasis on this, H&R Block is not qualified or up to speed to do your crypto taxes yet. Most licensed tax attorneys have not addressed this yet. Most CPAs have not addressed this yet. It's just not something they're up to speed on. These guys at TaxBit and some of their competitors, I'm not going to say TaxBit's the only source. They're just my favorite and the ones that I think are the clear leaders. There are very few people that know this space and know how to produce what the IRS needs to see in alignment with the IRS's view and clarity that they have around this to keep you out of trouble. It's really that simple. Anything you want to add before I bring in our just incredible breath of fresh air at the end of every show, our investor on the street, Bit Av?
I saw Wade ask a good question. He said FIFO or LIFO. For those of you who know that, what Wade's referring to there is a cost basis assignment method. So really good question, Wade. And that is, hey, when I go and sell Bitcoin, what cost basis law, if I acquired Bitcoin 4 times and then sold a piece of that, which one of those acquisitions do I have to use as my cost basis? So FIFO stands for first in, first out. That's a chronological date. I'm going to use the earliest one I acquired. LIFO stands for last in, first out. I'm going to use the latest one I acquired. Well, Wade, one of the things the IRS clarified in their October guidance of last year is that you can use 2 methods, and that is specific identification or FIFO. So LIFO is actually not in the umbrella anymore. Specific identification allows you to specifically identify which lot you chose, as long as you can track blockchain hashes, transaction identifiers to prove to the IRS, I chose this one, which TaxBit does automatically on the back end. We keep all those records for you. Guess what you can do? You can go and choose the cost basis lot that you have the highest basis in, meaning that's going to reduce your taxes to the greatest extent. And so it's better than FIFO or LIFO, as we're automatically, you'll see in TaxBit, we've got a type that's called HIFO, and it means highest in, first out, because it's really specific identification, identifying the one with the highest basis. And we'll go ahead and do that for you to minimize your taxes every time.
So let me ask you something. When you were taking your tests to become a CPA and stuff like that, was part of it, it's like, okay, Austin, we're going to, you need to take this test. We're going to get you licensed. Prepare to be and have fun and just enjoy. Because I'll tell you, I never thought taxes were fun before. You guys are bringing a level of excitement to this that is actually making it enjoyable to learn. Yeah. It's like, I'm incentivized now to actually learn something that I've spent my entire life dreading.
Yep. Jerry, that's right on, actually. And that's one of our missions. We want to make taxes sexy. And the only way to do that is to add value beyond tax compliance. That's one of our phrases, is we don't want to just give you your tax forms. Like, that's not sexy. That's not fun. We want to help you save money. We want to help you get a check back from the IRS. We want to help you analyze your portfolio. What is my ROI on a tax and cash basis? Where can I make improvements? How can I, as you said at the beginning of the show, keep more of the cash on my gains and not hand it over to the IRS? And so that's where taxes get fun. And so that's exactly one of the missions that we're embarking on.
Well, this is the last issue I want to address before we bring in Bit Av, and that is foreigners using U.S. exchanges responsible for U.S. taxes, since Texas, technically, they transacted in the U.S. borders. Address this, but also let's make sure we let the audience know that TaxBit is expanding jurisdictions jurisdictions outside of the United States. This is very, very, very important.
Yeah, good question, Dan. And the answer is no, you do not need to pay U.S. taxes. What would the IRS do, right? Are they going to come and get you across their borders? No, they don't have jurisdiction there. With that said, your local country likely does have tax rules. And so that is something that Jerry mentioned, is we're going to have support for hundreds of countries before the end of the year, being able to give international dropouts that really give international residents the information they need to go and file their taxes according to their jurisdiction. And then that, like I said, it's going to all be an iteration. Eventually, we're going to have the exact tax forms that apply to the world's countries, right? And so you won't even need to take our reports and get, and translate those onto your forms. We'll do that for you. And so it's going to be really, really good. We're excited for that.
Right on. Well, we're glad to have you here now. Folks, it's that time of the show. Let me bring in our lady on the street with the most incredible investor questions. That's right. It's time for Bitta Avenue. Hey, Bitta.
Hi, everybody. Hi, everybody. How are you guys?
Great. How are you doing?
Good. I actually caught the whole show today, so that was great.
Yeah, awesome.
So
Wonderful.
I'm excited.
Do you
Everybody asked.
Oh, go ahead.
Everybody asked such great questions that they literally answered a lot of my questions already. It's crazy.
Yeah.
Well, let me ask you, Bitta, have you personally in your journey had to deal with taxes yet?
I have not even filed my taxes for last year. Like, not just my crypto, but I just haven't filed my taxes. So, because I knew I was going to get a return. So I figured, I won't have a penalty because they owe me money. I don't owe them money. So I'm just relaxing. But now that I know, I can finally file my taxes. So
yeah, exactly. Yeah. Let's get that money.
Yeah, money that's exactly right.
Better than money in the government's bank account for sure.
Yeah, I have a friend that actually does my taxes. There's a group of them that live in California. They do my taxes, and I asked if they did crypto, and they all told me no, we don't know what to do. So the whole reason I haven't filed yet is because I was looking for, okay, how do I do my taxes here? So the one question that I have is, I can track what I've bought and what I have sold, which is very, very, very limited for 2019 because all I was doing is really buying and holding. But there was one instant where I thought I was buying Bitcoin, but instead of buying Bitcoin, I actually exchanged my XRP for Bitcoin by accident. Yep. So I know I would have to, I know it was a small amount, but that was an accident. I didn't realize because I guess I forgot to switch the first box from dollars from XR to XRP. So that got mixed in. So I ended up having to go back and buy more XRP to make sure my bag wasn't short. But I know for that instant, I would have to file. So that's the only thing, I guess, that I would have to do. But what's the difference between having to use your platform to file my taxes versus if I knew where I had exchanged something? Do you guys track, I think you said it already, but do you guys track the fee so that gets subtracted from, that would be the advantages, you guys actually keep track of how much it's also costing me, as far as fees?
Yeah, absolutely. Good question. Yeah, so we definitely take advantage of all of those exchange fees, and those help you from a tax perspective. So we track all of that for you. And if you have a basic data set, is it possible to do this on your own in Excel? Potentially. If you start making coin for coin trades, I don't think it really is feasible unless you have a lot of Excel and CPA knowledge. You got to get a lot of pricing data to the exact timestamp. It's something people don't think about. We pull that data on the USD equivalent of all of your pairs down to second increments, and so that's a big software accomplishment there. But yeah, that's a good question, Beta. Is we want to help you automate it, especially if you're a buy and hold type of person. You likely fall within our basic plan with Jerry's discount. You're talking $45 to make sure everything came in accurately in the most tax efficient way. It's likely going to save you that money. To Wade's question, we're going to use the most beneficial cost basis lot method. And so whereas if you were to try to do this your own or use CPAs that don't have knowledge in the crypto space, you're going to pay a lot more in taxes than the cost of just plugging everything into TaxBit.
Yeah. So is it like a yearly thing or a monthly thing?
It's just yearly. Yep. Absolutely.
Okay.
Yeah.
Yeah.
$45.
Yep.
And the other questions that I have is, I mean, you probably see it. This is not really in your jurisdiction, but since we talked about the Roth, what about life insurance stuff? Like, how does the tax play into, like, if people are investing in crypto and within life insurance, or is that even a thing yet?
I haven't heard of that. That question just blew my mind.
It's Austin. There's this whole DeFi craze built on Ethereum, where they are quote unquote
I haven't dealt
creating
with life insurance. Yeah, we've done a lot with DeFi, but not on the life insurance side with lending and borrowing.
That's part of this whole DeFi thing.
Yep.
Bida,
Yes.
be very careful. Very, very careful when messing around in those elements of blockchain.
Okay.
None of that.
Yeah, I haven't done anything yet. Yeah, I haven't bought anything yet. I'm just curious because I was watching a video that someone was talking about that stuff, so I was just curious what that's about. I'm all about research.
No, exactly, and you should be. And let me tell you this: I don't think I need Austin to say this, but he can verify it. It doesn't matter what after product. If it's on the blockchain and it's a digital asset, the IRS is going to view it as they don't view Ethereum any different than Bitcoin. They don't view Bitcoin any differently than VeChain. They don't care. If it's in that realm and you're in and out of exchanges, it's property. I don't care if it's a digital representation of your life insurance right now, whether that's valid or not valid. They don't care. It's going to all be looked at through the same exact lens, and that is property, and their laws are very clear on it until they change. Right. So you can apply that to anything.
Right.
Yeah.
So for somebody that is new into the space, because most people, like most of the people that I know, like I can only speak for the people that I know that are new, not only are we new to crypto, but we're also very new to investing. What tax advice do you have for people that are new, like as far as like preparing for the future and things that are inexperienced people do, I guess, when it comes to taxes?
Yeah, and that's a good question. And I think it's as basic as, buy low, sell high is obviously the best investment advice you're going to get. But I would add on to that, buy low, sell on or in crypto, take advantage of the dips, trade, get those tax losses, and then repurchase your position and take advantage of and accumulate wealth in the long run. And so as you're buying low and selling high, you're taking advantage of the tax opportunities in between. And really the only way to do that is with software and monitoring your portfolio, more real time. Crypto prices do this daily. It's not up and to the right linearly as we all wish it were. And so you got to make sure that you're taking advantage of the dips as well as the highs.
Right. So your software is this is how it works, Britta. What he's basically saying is by understanding their software as a trader, you can do tax arbitrage. You can literally game. He's smiling. I don't know if he can for him to say this. I'll tell you the truth. The truth is that you can capitalize on opportunities between the price that you're purchasing the asset and a projected expected return later by understanding how it works within the portfolio that you have, because your portfolio is going to be different than mine. So if I make a trade at this for this dollar amount, you make the exact same trade for the exact same asset at the exact same dollar amount, we could both have completely different situations. So it's not like buy this at $10 because it's great. That's out the window. This is now you're using information from your history to dictate the best forward-looking movement. It's called tax optimization. It's never before been in the human lexicon or vocabulary.
And you know what's cool? Yeah, it's right on, Jerry. Jerry just described it perfect. But Bitta, when you sign up for an account, you become a member of our community, and you're going to get blog articles, all this kind of frequently. We're trying to educate people, right? You're going to have access to chat with us. And so we want to help you understand. And that's something I just want to beg everyone in the audience. If you start using our software and you have questions, we have live chat support. During tax season, it's almost 24 hours a day. Right now, tax season lasted a long ass time this year. It's till July 15th, it got extended. And so right now on the weekend, our support team's taking some time to recover. But during all business hours, we're going to chat with you live. You can email us. We're going to get back real time or very prompt. But we're going to give you lots of content to digest and help you understand. That way you can, to Jerry's point, take advantage of this and be an educated trader.
Awesome.
One of the things, and Bitta, this will be really good for you as a kind of a nugget to maybe try to sink your teeth into and understand. It's a term called cost of capital. Okay, so cost of capital has a couple of different elements to it. The first and foremost, this money costs X. Well, that is going to change. People don't think that. People think, like a lot of people think, if I work for an hour and I make $15, I've made $15. If I use that $15, the cost of the capital was 1 hour of my time. Therefore, it has a static value of 15 going forward, right? That $15 has a value of $15 going forward. That's not the real world. The real world has factors like inflation, deflation, cost mitigation. These are elements that come into place, and I'm sure that Austin could elaborate if he wanted to. But the idea when you're investing and you're using software like what they've got going on here, you're not only taking in the cost of your capital, what it cost you, but what is the future expected return on that capital going forward? Well, if you hold it in dollars, the expected future return is a negative 3 to 6% per year for inflation. If you hold it in a stock, well, what's the expected rate of return on that stock going forward? Well, if you look at the stock market now, and that means maintaining itself. That's a whole nother question. Anyway, learn about cost of capital. It'll help make, just like optimizing your tax liability and tax arbitrage, it'll help you make decisions with your investment dollars moving forward. That's the whole point of why I went off on that little tangent.
So does your basic membership include the projections, or you have to get the advanced? Or what's the difference between the three, I guess? Like, what service differences are there?
Yeah, good question. So the plus plan is what we recommend, because that's going to include all prior tax years. Your basic plan is just going to give you this year, so the current tax year. Right now, for a limited time, eventually within the next 30 days, the tax optimizer, the forecaster, is going to be plus and pro only. Right now it's available to the basic plans as well, so you can take advantage of that for a limited time. And then it's just kind of support level as well. And then transaction volumes play into that as well. So if you're a high frequency trader, it costs us more to run all the calculations and do the server bandwidth and to support it, and so you'll be forced into that upper tier. So, and then there's new things coming out. We've got, I can't share too much here because there's going to be some surprises, but lots of investor tools, ROI analyzers. And so there's going to be things that are constantly thrown into those upper two tiers that, we just can't, afford as a company to produce at that lowest tier price point.
Okay. Makes sense.
Well, I'm going to throw in a quick question. So looking at this kind of from a 30,000 foot perspective, looking down with the platform and the optimization technology, how much of that's going to translate to me in my world as a spender as it pertains to utilizing crypto as an underlying asset of value for exchange in the world as it pertains to using my Uphold debit card to buy milk or put gasoline in my car?
Yeah, great question, Jerry. And spending in the eyes of the IRS is a disposition. It's the same thing as selling an asset. And so when you go swipe a debit card loaded with crypto, which are becoming increasingly popular, that is a taxable event. And so to Jerry's point, you want to swipe assets on that card that have tax losses in them first before you start swiping assets that have taxable gains. Because if you're swiping assets with gains, it's going to cost you the price of that item that you just purchased plus the tax bill to the IRS. Whereas the inverse is true. If you swipe a card with an asset with a loss, you could potentially get that, purchase that you just paid for free in the form of a tax refund or tax savings. So really good question. And Samo, I think Gary has a link below. You can get 10% discount if you can sign up down below. 14-day risk-free trial. Support, like I said, right now during this off season, during business hours, just chat with us, email us outside of those hours. We'll get back to you really quick.
Oh, good. Go ahead.
Go ahead. I have a specific question to my case, I guess. For someone that hasn't filed their 2019 tax and does very limited trading, if mostly like holding, but very limited trading, like what do you suggest?
Yeah, just reach out to us, Bitta. Yeah, come chat with us and we'll give you specific advice to your situation.
Okay. Sounds good.
And
just speak to Bill. Bill's got a great question. I'm a big fan of veterans. I support our honor services. There's a veteran discount.
Absolutely. Yeah, reach out to us, Bill. Reach out to us and we'll get
Thank you, Bill, for your service.
Absolutely. Yeah, thank you.
Right on. Okay, we're going to be wrapping up. Get your last questions in, folks. And while we do that, because there's an 8-second delay from the audience seeing us to what we're actually doing, Bitta.
Yes.
What little gem have you not hit us with yet? What's on that notepad? What's an investor question that your audience from Instagram Live or you personally want to address? Austin and I will do the best we can to answer it.
Well, you guys actually answered most of my question. Bill has been asking incredible questions today. The audience literally touched on everything, and then Austin explained much of literally everything. So there is nothing left on my list, which I was very surprised about.
Awesome.
Everything got checked off.
And likewise, to the audience and to you, anyone, if questions come to mind after we end the show here, reach out to us. We want to help educate you. We want to make sure you're taken care of.
Awesome. Thank you.
You can find TaxBit's Twitter account right in the description of the video, as well as the link for the 14-day subscription and 10% off should you choose to become a member of the platform. Thank you, Brady, for throwing that up. I did not spell description correctly. It's
Friday night, doesn't matter. Yeah,
it doesn't matter. It's Friday night. Anyway, I want to say thank you to Austin and thank you to Bitta. I'm going to put you in the green room. Feel free to stick around if you want to have we do a show wrap up off camera. If not, if you got to go, I completely understand that. But it is time to bring in show producer extraordinaire, Mr. Brady, for final thoughts. Brady.
I guess he'd be talking about me.
Yeah, you're the
final thoughts. Well, are you giving me the ground for final thoughts? Can I make it up, or do I have to go by? Do you want me to get in the ballpark, or can I go universal here?
I'd say go universal. As long as you are part of that universal, is you're going down into the description of the video, pressing the link for TaxBit, and taking the 14-day trial, then you're free to do anything you want. No, of course, dude.
Rap shows are getting good. Rap shows are getting good. That's what I would say. And taxes are now sexy. This is incredible. I'm literally excited to figure out, what the future holds now that I can tax arbitrage. I mean, I don't know if it's even legal to say it, but if as of now, if they look at all of those virtual currencies as just virtual property, it's like you're in a Sim City and your Second Life, whatever it is, and whatever lumens, whatever Bitcoin, whatever Dash, whatever it is that you have, it's so this is great because it's kind of like a light at the end of the tunnel. Taxes suck, but I don't know if it's through blockchain or something else. Now that we can maximize and profit off of our tax expenditures, I don't even know if that makes sense. Anyway, I'm excited. And as I said, the rap shows are getting good. So I think I see something in the future. I don't know how we're gonna do it, but I think we should start recording them. And I think I don't know.
Oh, and make them available to the whole world,
or to certain. I don't know. I mean, I get almost as much value out of them as I do the actual live stream. Oh. So it's kind of like I want to share it, but I don't know how, and I don't know who's interested in it. So it's something I've been thinking.
Interesting.
Yes.
Interesting. I'm going to spend my final thought addressing Charlie. Hey, Charlie, this is a great question. Now, we know anytime you sell an asset and the IRS is viewing, in this United States, the IRS is viewing it as property. So therefore, there's going to be, it falls in that category. Now, it depends on if, you were upside down in the asset in the beginning. So if you bought a Bitcoin for $1, you're selling it for 50 cents to buy a gallon of gas. Is that a taxable event? Absolutely. But it's a taxable event in your favor because you're taking a hit. You took a hit on the live, you cost basis in price. Okay. So with that being said, when you're using cards, now, Austin didn't address this, but in their software and in their app, all the same optimization functionality that you saw him going through there on the platform when he was showing it will be available to you to understand that, for instance, your Uphold app, your Uphold debit card, you tell the app what asset you want to liquidate for that tank of gas or that gallon of milk ahead of time. Well, if you're using and interfacing with the TaxBit software and maybe it's in your best interest, you take the least damaging event, in other words, the lowest tax liability to make that purchase. If you continually do that over and over and over again, you're going to keep more of what you make as opposed to giving it to Uncle Sam. Does that make sense?
Yep.
I'm not a tax guy. That's not my lingo. It's not part of my vocabulary. I'm glad that we're learning this stuff now. Can you imagine the learning in this space? Oh my goodness. Yes. Yes. And we'll be here 5-10 years from now, directing people to older content. We'll have a whole library of educational stuff. That's the beauty of this medium, is that through the creation of this kind of content, although it's prevalent today, it's going to be just as prevalent for somebody who is at our level or space or frame of mind 5 years from now. That's the beauty of this kind of content, is that it can be put on a shelf and by a click of a button addressed at any time by anybody with nothing more than a device and an internet connection. Is that phenomenal or what?
It's like geek phenomenal, because the only way anyone can wrap their mind around something like that is if their mind is already considering like universal values and just ginormous like macro things. You can kind of wrap your mind around it. But if you're like, on the earth looking at through a microscope at a bug, you're going to say crypto. Oh, that's great. Oh, you mean you can profit off your taxes? Oh, that's so cool. It's just going to be like, so there's a big world out there, folks.
So from Brady in New York and me down here in Costa Rica, until next week, everybody, Pura Vida.
Have a good night.